what total global financial assets are in the world and how much Bitcoin can capture from that total addressable market. So total financial assets in the world are 900 trillion US dollars. And I like to think that Bitcoin will capture 5% of that addressable market. What's 5% of 900 trillion? That's 45 trillion US dollars in today's dollars. What is 45 trillion US dollars divided by 21 million Bitcoin? That's over $2 million US per Bitcoin in today's dollars.
Hey guys, welcome back to the channel. Bitcoin maximalist Greg Foss discusses the current banking crisis and why Bitcoin was designed as a lifeboat for situations just like this. Foss believes that the banking system has always been sick and encourages people to uncover the inner workings of the fundamentally flawed financial system. He believes that in addition to Bitcoin's purpose as an alternative, it's the best asymmetric opportunity he has ever seen. Greg Foss also discusses his Bitcoin price prediction and notes that while a $1 million target this year has a low probability, with the current banking collapse and trajectory of the US dollar, he thinks it's not impossible. He also outlines how we'll see the unbelievable $2 million target for Bitcoin much sooner than most people think. Let's get right into the latest interview with Greg Foss as he shares his Bitcoin prediction and where the market is headed in 2023. Before we dive in, don't forget to hit the like button and subscribe. It's a tremendous help for the growth of the channel and helps us bring you more content just like this.
All I will say is, people, the banking system is sick. And it's always been sick. It's just that people are wisening up to the true realities right now. This is what Bitcoin was designed for. So don't forget, in 2008, 2009, the Genesis block basically said the chancellor is bailing out banks again, right? So this is the second coming of a bank crisis that is the result of not solving the first banking crisis properly. So let's understand that Satoshi had a vision that he needed to have a lifeboat. And luckily, we do have that lifeboat. Is it all the marginal buying doing to that? No, it can't possibly be. But I'd like to think that a good chunk of it is, because that's what Bitcoin was designed for. And it's performing like it should. Now, here's the crazy thing. James says Bitcoin should be at 50,000. I'm going to be like, I can't believe it's not at 250,000. And by the way, I'm even going to go on record saying this guy Balaji, or Balaji, however you say his name, I didn't even know who he was before, but man, I like his style. Because why? Even though I think it's a low probability that he's right, it's not zero, people. Just please understand what a distribution of possible outcomes looks like. And he's focusing on a tail risk, or in this case, a tail opportunity, because if the system does come down in magnificent fashion, Bitcoin will be at a price of greater than $1 million. When? That's the key. Is it going to be in 90 days? Unlikely, but not impossible. I always like to look at things from an expected value, potential outcome, and you put probabilities on different prices, and then you do your expected value calculation. That's statistics 101, how to calculate an expected value. But I'm very clear with everybody. I have a price target for Bitcoin of over 2 million US dollars. And should it be there? Yes, it should be there today. And the fact that it isn't blows my mind, because it's so damn cheap. So I can't argue with Balaji saying that in 90 days it should be at $1 million. This is something that makes it the best asymmetric opportunity I've ever seen in my life. And that is all good, because asymmetric return opportunities are what define careers. Well, that's my price target, and it's not a limit, but it starts with examining what total global financial assets are in the world and how much Bitcoin can capture from that total addressable market. So total financial assets in the world are 900 trillion US dollars. Okay, that includes all global debt, which is 400 trillion US dollars. It includes $300 trillion of global real estate. It includes about $100 trillion of global equities, and then $100 trillion of other assets like fine art, gold, commodities, currencies. At the end of the day, that's $900 trillion, right? So 400 plus 300 plus 100 plus 100. And I like to think that Bitcoin will capture 5% of that addressable market. What's 5% of 900 trillion? That's 45 trillion US dollars in today's dollars. What is 45 trillion US dollars divided by 21 million Bitcoin? That's over $2 million US per Bitcoin in today's dollars, which is to say, as long as it's trading at less than that price, I view it as cheap to my target price. Now, there's other ways of calculating intrinsic value of Bitcoin, including using credit default swaps and everything. All of this goes into a calculation where I just look at Bitcoin trading at 25,000 US dollars and I say, thank God that it's there so I can buy some more and I can get other people onboarded. Here's a question. So what is keeping BTC price down according to Zed Logic? Look, that's what makes a market, okay? A market is made by buyers and sellers. When it was trading at $1,000 of Bitcoin, when I first got involved, I'm like, I know this thing is going to 10,000. Did I load up the boat? Yeah, a little, but not as much as I should have, given now it's trading at 25,000 and I figured it's going to go to 2 million. So manage your risk. Don't put a time limit on your investment. I own this thing for 20 years at a minimum. I'm owning it for my kids, and I'm not going to sweat the fact that it's trading at a price that I think is extremely cheap. Well, it was a lot cheaper than that at one point in its time, and it did get to 70,000, but 70,000 is such a rounding error. I just look at it and I'm like, okay, guys, if you're sweating over the next $5,000 or $10,000 move in Bitcoin, you're managing your risk inappropriately. You don't know how to manage risk. It's important to understand that the banking system, which is the transfer mechanism of the fiat Ponzi, requires inflation as well. So even though technology, as Jeff Booth points out, and a lot of people are talking about now with chat, GPT and whatever, should be deflationary, the banking system can't handle deflation because of the collateral value that secures a lot of the loans. So imagine if real estate didn't always go up in price, the loan to value ratio of the bank's loan versus the value of the property it lends against. If the loan is greater than the value of the property, the bank owns it. So they need the value of the property to appreciate over time with inflation.
Foss believes that Bitcoin will capture 5% of the global market. He believes that by examining the total financial assets in the world, it's just math. When calculating the expected value of investments, he weighs probabilities and statistics and shows how Bitcoin will be the leading asset in the market. Foss says that he's not concerned about the current market keeping the BTC price down and advises managing risk accordingly and not putting a time limit on investments. As long as Bitcoin is trading at less than his current price target of $2 million, he still views it as cheap, especially given the 10x price increase it goes through every 4 years. With the current volatility in the market, we could see the price skyrocket in the next few months. What do you think about Greg Foss's prediction for Bitcoin in 2023? And how do you think the current banking crisis will play out in the coming weeks? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.